The climate crisis is a defining challenge of our time, and the technologies we have today will only take us halfway. So here's a question. If classic technology transfer through startups and venture capital can't deliver the breakthrough we need, is it possible to intentionally create the startups that will solve for climate change? To unpack this complex and actually quite urgent topic, I'm joined by Benjamin Tincq, the founding partner at Marble, a venture studio that builds deep tech climate startups from scratch. Marble partners with scientists, engineers, and operators to tackle hard climate problems from geologic hydrogen to methane emissions and invest in the funding teams at pre-seed. In this episode, we explore what it takes to go from -1 to 1, why talent, not capital, may be the real climate bottleneck, and how Europe could lead the race toward clean energy abundance. You are listening to VCO2, the Climate Investing Podcast. And before we start, please don't forget to like, comment, and subscribe if you're on YouTube, or give us a follow and a 5-star review on Apple Podcast and Spotify. And let's dive in. This episode is sponsored by Dealmaker. Dealmaker helps cleantech companies bypass traditional funding barriers and raise millions on their own terms by going directly to investors online. For example, EnergyX raised over 75 million from 40,000 investors using Dealmaker's solution. So if you're ready to fuel your vision, visit dealmaker.tech to learn more. Thank you to Dealmaker for sponsoring this episode. Benjamin, welcome to the show. And I guess let's start maybe with Marble's story. How did you get there? Why did you create Marble?
Thanks, Hugo, and thanks a lot for the invite. It's a big pleasure to be on the show. Why did we start Marble? So we met together with my co-founder Johnny in 2020. Back then, he was working at Entrepreneur First on the program side. Had been working with a lot of funders and was really thinking about building a program that was really focused on supporting super early stage, really ambitious scientists and founders who wanted to work on climate. And I was kind of arriving to the same idea on my side. I had spent a year working with a fusion power founder. So I met Francesco, founder of Renaissance Fusion, one of the biggest fusion power company in Europe. And when I met him, he was just one person who had this crazy idea to build a fusion power plant. And I worked with him for a year to help structure the project, raise his first round, and so on. And I really thought that just working with single individuals who have great ideas and to help them to shape their ideas into really ambitious companies was just a very fun thing to do, and also was filling a gap in Europe, which is this, you named it, like the -1 to 1 phase. And also, we thought it would be like way more interesting and way less competitive than launching a fund, for instance, because in the end, we don't need deal flow. We create our own deal flow. We create our own companies. And that was the genesis of Marble.
What does it mean to go from -1 to 1?
Right. So maybe it's useful to tell a bit about what's the model of Marble and how it works. So it's a venture studio focusing on climate tech. Venture studio. So we are not a VC, even though we are on VCO2 today. Venture studio, it's basically a company which builds several companies in parallel. We do that only on climate. We focus on very, very big problems that can address massive multi-megaton problems or massive adaptation problems across energy, industry, agriculture, carbon removal. And the way it works is we try to identify a problem space where there's a massive unsolved issue, where markets are very big and where we see technical white space where we can build something that could really move the needle. And then we'll look for individuals who have a very strong technical edge in that field and have very strong founder potential. We work with them to develop and shape their ideas into what will become a company. We try to de-risk as much as we can on paper, from the techno-economics to their commercial roadmap to their technical de-risking plan. We look for the right co-founders for them to build a great team. And then we spin out this project and we become the first backer at incorporation.
And so, how does the model work then? Because obviously, building a lot of different companies takes a lot of money. Where does Marble gets money from? How do you create the companies? Who invest in the company with you? Like, what's the model there?
Yeah, great question. So we raised into the studio itself. The studio is a company, so we raised like a startup, except that the proposition was not to build one product, but to build multiple companies. And with that capital, we finance our operation and we finance the company we create. So we invest 250,000 per company at incorporation. And then they will raise a seed round or a proceed extension 6 to 12 months after they leave the studio. And then we become very active again when they raise their next round. So we really work with them to structure their raise, to find the best investors, to manage their fundraise. And so we get very active on that as well.
And what's percentage that you take into the company? I don't know if that's a public
No,
information.
it is on the website. So we own 20% of the company at incorporation. The founding team owns 80% at incorporation.
Super interesting. And you mentioned already something interesting because you said that you bring technical funders first. Do you take care of the commercial part? Do you bring a co-founder for the commercial part? Like, how does that relationship works?
Yeah, it's a very interesting question. So indeed, we start with mostly technical founders who are typically either people who come from a PhD postdoc background, or some of them can be experienced engineers, or maybe they have been working in startups and have a technical or industrial background. I would say in 80% of the case, they become CTOs or CSOs of the companies, and then we look for a CEO to complement the team. In some other case, they have a very strong commercial sense and they can become CEOs and they look for the CTO or CSO co-founder. In the first month of the program, we don't try to match them immediately with the right co-founder. The first step for us is finding and validating a great idea. And it's only when we know what the idea is that we look for the ideal complement for first founder and idea. You have other programs that start by matching two individuals and help them find an idea. We really like problem space first, then first founder, then ID, and then second co-founder. That's the way we work.
Yeah, I think not to name them, but Entrepreneur First is a bit different.
Which is another great program, different model, but really impressed by what they do.
For sure. I guess something else that I had in mind. So, you've been building so many different teams. What makes a great team?
Great question. I don't know if it's really different in climate tech than in other sectors. What makes a great team, I think it's, do they have like a massive drive and passion for the problem? Are they obsessed by the problem more than by the tech? Are they obsessed about the customer? Are they really, really productive? Can you see massive productivity increase, in particular when they work together, as opposed to when it was a single individual? Like, it shouldn't be like 1 + 1 equal 2, but 1 + 1 equals 10 or 20. I don't know. And then, do you see a massive rate of learning? Like, do they improve massively as they learn about the problem and the tech? The kind of things you hear about startups in general just apply to climate tech.
Yeah, I like that because it feels like there's a saying, that a startup is successful if they can iterate fast. Like, they don't have to get it right the first time, as long as they can manage to iterate fast enough so that they have enough capital to go to the next product. But going back to your model, I think something that's interesting that is like a lot of people talk about the gap mostly at in Europe, like Series B to Series C, where like we don't have financing. You fill a gap at the pre-seed stage, like super early. Is there really a gap there?
Yeah, so the thing we like to say is like one of our core belief is that today there's no scarcity of money, no scarcity of capital, but there's no scarcity of talent either. We think one of the key bottleneck today is matching the right talent to the right problem they could be working on to maximize their impact. There's a lot of extremely smart individuals who maybe are working on interesting companies, but we think that they could even be working on something even more ambitious, even more big, even more important. And what we really try to do is to maximize that. We think that's the gap we're trying to fill with Marble.
That makes a lot of sense. And how do you recruit these people? Like, where do you source them? Because you mentioned, for example, like if someone is working at an other startup right now and you think they have more potential somewhere else, like will you go and ask them to come with you? Like, what's the process there?
So there's a lot of different ways we recruit founders, whether it's the first founders in residence or the co-founders. So we have a natural inbound flow of applications, people who hear about us through the content we post, through referrals from other founders, from investors, from professors, if they're still in academia. We try to publish and be very open about the kind of ideas and the kind of problems we're interested in, so people can self-select and apply. But we do also try to map the relevant technical, industrial, scientific ecosystems in the problems we are interested in. And we directly approach people who, on paper, have the right kind of background for what we're looking for. And then we also find people through this outbound approach.
And did you just, am I correct in saying like you posted a list of like 20 ideas like recently or something like that?
Yeah, we posted for this year a list of 25 opportunity areas we are really, really excited about across 5 broad themes. Things like power infrastructure, so that's grid infrastructure, data centers, these kind of things. Things around energy security, energy abundance. So geothermal is like an area we're really, really bullish on. We think geothermal power could meet 10 or 50% of global energy demand in the future. We really want to build into that. Things like, for instance, industrial decarbonization, like manufacturing aluminium and so on. So yeah, there's an article about it that we can link in the show notes maybe.
Definitely, I will do that. So I guess you already touched upon it a little bit, but you want to solve hard climate problem. What is a problem that is easy to solve in climate?
That's a great question. One funny answer would be it's a problem that you cannot just solve with a SaaS platform, I think. But no, a more serious answer would be for us, it's like 3 things. First, is the scale of the climate problem massive? Meaning, does it represent several hundreds of megaton of greenhouse gas annual that needs to be abated? Or is it a massive adaptation problem where the cost of climate change would be really massive, like several tens of billions of euros and hundreds of millions that are concerned that would be affected by, I don't know, water scarcity or food scarcity, for instance. The second thing is there needs to be enough technical white space for creative ideation to find something that's different enough and that's additional enough compared to the landscape of existing companies and existing solutions. And the third criteria, because it's very difficult to do, the upside needs to be massive. So it needs to be a very large market with an existing demand where we can see a clear go-to-market. Once we see these 3 criteria, that's enough for us to be a problem where we decide to spend more time on. We research this area. We try to build a thesis of what's interesting. And then we look for the individuals who can work with us to find a great idea in that space.
And I think there's probably a strong correlation between the first one and the last one in terms of like if there's a strong, large climate problem, there's probably also a strong, large opportunity to make money.
Yeah, often in most cases.
Definitely interesting. Well, maybe just to give an example to people that are listening to this podcast, but what is one company that you've developed so far or built or launched? I don't know how should I say it, but that you're very proud of and that actually solve a really hard climate problem?
Yeah, great question. There's a say that it's difficult to pick your favorite child, so I'm always conscious when I choose one. But maybe as an example, I'm going to mention one of the latest we've developed. So actually, the latest. So it's a company that focuses on reducing methane emissions in livestock farming. So cattle, cows. Really, really massive problem. Methane, it's about a third of the global warming we've experienced to date, and a lot of the anthropogenic emission of methane comes from cattle farming. And today, there's not a lot of very good solutions to reduce these emissions. And also, farmers don't really want to pay for something that reduces emissions because they have very little incentive. So we've worked with an amazing team to develop something that focuses on improving the productivity of the animal. Because funnily, the methane emissions in the cow, it's actually an energy loss. The energy that the cow used to make methane does not go into milk production, for instance, or meat production. And so the idea is, can you redirect this energy loss in a way that you increase the productivity of the animal and you sell to the farmer the animal productivity, and it happens to reduce emissions and to reduce methane emissions by 60 to 80% in addition to that. So it's a new company still in stealth mode that we're working on, but we're really excited about what they're working on.
Interesting. So it's like engineering a cow.
It's not engineering the cow. It's like like a lot of feed additives or products that farmers use that are already geared to addressing animal productivity. It's just a way to do that in a way that also happens to reduce emissions.
Interesting. And I guess on that topic, I just want to pick your brain a little bit. Might be a bit of a spicy question, but like, is the problem not elsewhere? Is the problem not the fact that we're actually using animals to procure food? Is that the most efficient system that we can do?
Yeah, so that's why there's a lot of solutions also that come from how you can help people eat more plant-based foods and so on, of course. But I think it's kind of a crowded category today, but I think there's a lot to do in that space for sure. That might be an area we might look at more closely in the future. But I think that even if you account for that, there will still going to be a massive share of the population which is not going to transition very quickly to plant-based food. And I don't think we have the time to wait for everyone to become vegetarian. We also need to address this massive segment which is going to continue to eat meat and to eat dairy products. And today there's no good solution that exists for addressing these methane emissions. So that's what we wanted to tackle.
And I think methane is, I think from what I can remember, it's like it's much more damaging actually than CO2. Like we talk a lot about CO2 because it's much more present and we produce much more, but I think methane is even worse for the environment, right?
Yeah, so on a 20-year timescale, methane has a warming potential that is 85 times the potential of CO2, which is, even though methane, I forgot the exact ratio, like in volume, in mass, it's much lower, the emissions amount, than CO2. But in terms of actual warming, it's a third of the warming we've experienced since the Industrial Revolution comes from methane alone.
Wow. So I should rename my podcast VC Methane. So I guess to transition to another topic today, what I find interesting about your model is that you're actually building company on a daily basis. Like that's your job is actually to build new companies. What's the process to develop a new company from scratch and to do it successfully, obviously?
Yeah, I think it's more an art than a scientific process, even though we try to have processes to do it. Well, I think for us, the first step is to build conviction on a problem space, on an area, and then look for a founder who has some sort of an edge in that area and like a very high founder potential. Once we find that person, we really try to systematically understand, what's the landscape of what has worked, what has not worked, where are like the technical white space, and then we generate ideas. We try to kill the bad ideas as quickly as we can. And once we have an idea that we think makes sense, we try to really validate as much as we can on paper. So that involves things like, doing a robust techno-economic model, basically a fancy word for a spreadsheet model where we try to model all the inputs and the outputs in the process, in the tech, in the hardware product, or whatever it is you're building, to try to make sure that your unit economics will work at scale, because in the end, that's what matters. And then we try to make sure that there's, customer demand for that. So we spend a lot of time helping them to do customer discovery and customer validation. We try to help them to build a great detailed roadmap for when they leave the studio. What do they de-risk in what order? Because deep tech and industrial tech in general, you have something that's low TRL at the start that's usually way more expensive than your target. And it's all about what technical risk do you retire first and where do you down cost first to increase the value of what you're building and lower the risk over time. So we try to help them strategize in what order they should do all of that, both on the tech side and the commercial side, and what are the right founding milestones associated to that. Basically having a plan. And then when we build a company, they go forward with that plan.
It's interesting because it makes me think that Marble is probably the best friends of all of the VCs on the planet, because everything that you just said right now is all of the complaints I hear from VCs on every podcast episode I do, basically. It's like, basically, they say, for example, founders have great science, but they don't have a go to market. You're solving for that. They have a low TRL and no path to getting higher. You're solving for that. Like, you are the best friend to every VCs. What's your relationship actually with other part of the ecosystem?
Well, we certainly hope we are friends with them, because we really count on them to invest in the companies we we produce. And so far, it's been great. We no, we have great relationship. I think we often catch up, to share ideas about what we see, what are the gaps like in the area with like some of the top VCs in the space. We know, I think, most of the top VCs in climate tech in Europe and the US and a bit beyond. We've had a few companies that have gone on and raised pretty good seed rounds in the last few months. So Vema, for instance, who raised a 30 million seed round led by Extentia and Propeller for geologic hydrogen, so extracting very, very cheap, clean hydrogen from underground. Amazing company. And then Helium, who raised from 360 Capital and HTGF recently to scale the production of cheap, clean methanol to decarbonize maritime fuel and aviation fuel with methanol.
How many companies do you need to be successful at Marble? Like, what's the ratio of like companies that you can fail versus companies that needs to become large companies?
That's a great question. I mean, in venture, you usually say you only need one to work and to be the big success that return the vehicle or the fund. In our case, it could be one if we have a massive success. But like we used to say, we try to build companies that could become unicorns. But because we're a tiny company, we actually don't need unicorns to be successful. We could have a few moderate success and still be successful. But we try to optimize for the big success because it's also like what drives us is like building massive industrial companies that can transform their sectors, decarbonize, and help us achieve our climate goals.
Does that come from an inside perspective that you're scared about climate? Is that why you want to build such large companies? Because we need large companies to actually solve the problem?
I think in our very first website, and maybe still on the website today, we were in the about section about us. I think we had something like, hey, we founded Marble because we are freaked out about climate change. I think it was even in the mission statement. And yes, for sure, it's scary, I think it was even more scary 4 years ago because the pace of action was very slow. But the thing that gives me hope today is how much progress we've done in 4 years. It's easy to still, be pessimistic, but when you see the increase in investment in the energy transition worldwide, or the pace at which technologies are being developed and brought to market, of course, there's still a long way to go. But I think the direction is the right one. We just need to make sure we continue to accelerate.
For sure. And I guess, you have bold ideas. You don't shy away from large problems. How do you balance that with making sure that you also, generate returns? Because obviously it could be easier for you to actually create a SaaS company and then make money off of it. And then at least you have a certain level of income, like for Marble, but you don't care at all. You seems to be just caring about the large problems. How do you balance that?
But I would challenge the fact that building difficult companies in deep tech or hardware makes less return than a SaaS company, or is more difficult. Because I think, first of all, ambition attracts talents. And if you're trying to do something very, very difficult, there's a chance you might attract the best people who are just really excited about that problem from an engineering or commercial perspective. And I think also, in the end, we often say that we trade market risks for technical risks. So yes, what we're doing is very risky, but there's almost no market risk. Meaning, if you can build it cheap enough and with the right performance that you say you want to do, then they will buy it because it's just a better product. It's cheaper, it's more efficient, and it happens to reduce emissions. While if you're building a SaaS product for, I don't know, like HR performance or something like that, you have 10 other people that can copy you tomorrow, or maybe who are already on the same market. And the market risk is just a bloodbath. So we don't operate in these markets. We focus on things where you can be unique, differentiated, and just build a better product.
So as long as the product is at a reasonable price, your companies will succeed. I think it's a great way, the way you put it, and the way you trade different risks. How much are you involved after the launch of the company? Like you said, the company leaves at some point Marble. Like, what happens after Marble for these companies, and what's your relationship with them?
Yeah, so we incorporate the companies with the founders at the end of the program. Our support is obviously much less hands-on and less day-to-day that we do in the program, but we continue to do check-ins with them every couple of weeks, try to help them unstick whatever problem they have. And in particular, when they raise the next round, that's when we become very active again, helping them with, a lot of introductions in our network, helping them to strategize and plan their raise, negotiate their term sheets if they need it, back channel to get like the unofficial version of what the feedback they got and so on. So we get very involved with that.
Are you afraid that someday you're going to fall in love with one of the company and you'll have to leave Marble?
That's a great question. I think it's funny because I think you have a few examples of startup studios where the founders actually decided to go with one of the companies they built that they really loved. And yes, of course, that would be the case. But I think both for Johnny and myself, I think the reason why we decided to build a studio is because it was difficult for us to find one idea or one technology that we would be passionate enough to do for 10 years, because 10 years is a long time. And so far, we haven't found that idea. We are really excited about all of them. And our job is to find people who are even smarter and better than us to run these teams, who are like way more qualified than we would be to run these teams.
I guess let's transition to another section. Before this episode, you had mentioned another topic that you really care about, which is clean energy abundance and the opportunity that we have in Europe to produce a lot of clean energy. What's interesting there? What's your vision for clean energy in Europe?
Yeah, it's a difficult question. I think today in Europe we pay for electricity a price that I think is twice as expensive as in the US, for instance, because the US has very cheap natural gas in particular, and the price of our electricity on the grid is indexed on the last capacity that is called by the grid, which is natural gas, which is more expensive in Europe. Also, there's the carbon tax on top of it. So even the renewables pay for the carbon tax that the gas power plants has to pay, which is a bit insane. So maybe there's something that needs to happen on the electricity market reform. We don't have a startup solution for that, obviously, but there's other things we could do. We could help to solve a grid flexibility, like find a way to flatten the curve and manage the demand. So we're really interested in novel approach to do that. We could help to build new, clean, firm 24/7 capacity. So geothermal is an example. We're really excited by geothermal because we think it could be one of the resources that would be the most abundant and that could also reach the lower cost per megawatt hour. I think there's a path to less than 50 euro per megawatt hour with geothermal, which is 24/7, which would be even less than nuclear, than gas with CCS, or that renewables with like solar and wind plus batteries. We probably need to do all of the above, but yeah, geothermal is one area we're really excited about.
And I think Paris is a good area for geothermal. I mean, the Parisian region, I think, has great geothermal bases, from what I've heard.
Yeah, and Europe in general has massive potential. The IEA released a report a couple months ago on the potential of next generation geothermal across the world. And yes, there's a lot in the US, there's a lot in Asia, but also a lot of potential in Europe. So yeah, really excited about this.
Does that mean Europe and France will lead the climate tech race to clean energy?
Great question. I mean, I don't have a crystal ball. I hope it will. I mean, we certainly have the potential for it. The density of talent in Europe is just incredible. We have fantastic universities and research centers. We have a lot of the demand here, a lot of large companies who are like really ambitious climate goals, who want to decarbonize, which is not something you could say in the US, for instance. The US has also a lot of advantage on talent, and we love doing stuff there. But for the demand, you have a lot more corporate purchase power here for decarbonization, I think. It's also fairly small continent, very connected ecosystem. It's very easy to go from Paris to London to Germany to Switzerland to Belgium. So one of the strengths of being in Paris is we are really, I think, geographically and in a very optimal geographical center for Europe. So yeah, there's a lot to do. And yeah, in energy in particular, we have some of the best research centers and talent. So I do think there's a lot to do here.
Have you seen the corporate demand for sustainable energy decreasing in the US in the last few months?
I think in general in the US, if you're a large company and you say you want to do something for climate or decarbonization, I think it doesn't speak that well with some of the investors that have different political views. So I think it's, as far as I can tell, it's more challenging, but I don't live in the US, so I don't maybe have the full picture.
Yeah, and actually, I recorded another episode today with the funding partner of World Fund, Craig Douglas, and we talked about resiliency. And I think that might be the new label for climate, but let's see in the future. I guess to transition to another section, I mean, we already touched upon it a little bit, but what makes a great funder? I mean, you said that you look for scientists that have potential to be a great funder, which means that it's another quality that you have. What is it?
So we look for founders in residence who could be scientists, engineers, operators. And yes, indeed, most of them are first-time founders when they join the program, even though we do have some repeat founders, and increasingly it's an increasing share that we have. So in that case, we can look at what they've done before. But when it comes to first-time founder, I mean, there's a few things you can look at, right? First of all, are they highly coachable? Like, how well do they respond to feedback? You know, are they so in love with their first idea and their worldview that you just cannot give feedback to them? That is a very important thing. Are they highly productive? Does the rate of productivity and learning increase over time? That's another thing. Can they explain very complicated ideas in very simple terms? Can they sell what they do to, you know, their future co-founder, to their future customers, to their future investors? Are they just really, really driven by the problem? Are they super resilient? Do they don't take no for an answer, and will they continue? That's some of the traits we are looking for.
That's amazing. And I guess how do you manage that relationship with them on your side? Because one thing that could be hard for you is that they are so deep into a topic and so technical that they can tell you whatever about their technology, and it's hard for you to, define whether or not it's right and define whether or not it's accurate and if there's a path to this technology.
That's a great question. Would someone come and sell us cold fusion, and would we believe in that person? That's a question. No, I think thankfully we're very lucky that the studio team Marvel is not just Jenny and myself. We have an entire team, including like a team of venture scientists who are like extremely competent in their own field of expertise, from energy to chemistry to biology to chemical engineering process and so on. And they do a lot of the hands-on work, working with the founders to go through their ideas, to generate ideas with them, to validate these ideas. And also we pull from our network of experts. So every time we dive into a sector with a founder, whether it's geothermal, whether it's grid, whether it's biotech and aerobic digestion and others, we try to reach out to all of the top experts in that field, from science, industry, and so on, to validate the hypothesis. So no, we don't rely only on the founder insight, and we work with them to validate these ideas.
And how have you built that network? Because it feels like you know everyone in the space. Like, what's your secret there?
I think it's just repetition and hard work. You start from your first circle and you expand the network over time. So it's really one of the beauties of the studio model is that you compound the network and the learnings over time. And sometimes we get back to people we met 2 or 3 years ago in a different area, and we stay in touch, and then we can reach out to them again for another area we're working on. And yeah, people stay in touch with us, and sometimes they want to help and join the next company.
Very interesting. Well, I guess one closing question on the marble topic, but is there any learnings, something that surprised you over the last few years since launching Marble that you wouldn't have expected?
That's a great question. What has surprised me the most? What has surprised me the most? Um, Maybe something I didn't anticipate, but which in hindsight kind of makes sense, is how quickly trends change in venture worlds. And you can really see, like, from one year to another, there's really themes that stick. Like this year, everyone is around, oh, resilience. Can you make synergies with the defense industry and data centers and physical AI and robotics? And the year before it was, I don't know, there were 2 years ago, there was like carbon removal was super hot, and then industrial decarbonization, and and you can really see like the trends come and go. And one of the things we try to do is obviously to try to leverage those, but also to try to think ahead the curve of like what's next.
How much does that influences you in terms of like choosing a market to go after?
Yeah, it's a great question. I think we have to listen to it, but not completely lean into it, because I mean, one of the things to keep in mind for what we do is like it takes time to build a company. It's not like we can pick a sector and have the company built in 3 months, because it takes time to build conviction, find a founder, work with them, build the tech. So we have to really think of, okay, when we choose a sector, do we believe that this sector is going to like in what state will the sector be in 2 years from now, basically? So that's what we try to do.
Yeah, and obviously you have an incentive to also build something that investors want to invest in as well. So like it's a difficult balance.
To give you an example, when we started working on geologic hydrogen, it was in, I think we really came into that topic like in 2022, the beginning of 2022. Very few people had heard about geologic hydrogen back then. We really dive into the ecosystem because there was a strong academic network in France. And then we ended up meeting Florian, who had done some of the first work, actually, like the very first person to work on stimulated geologic hydrogen. So not looking for deposits of natural hydrogen, but injecting water and catalyst in order to get hydrogen out. So looking for the source rock only. And then, I don't know, 1 year after that, geologic hydrogen became a very hot topic, and a lot of VCs and founders started to get interested in that. And the good thing is, like, we already had a company lined up, which had a superior product and process compared to the rest of the ecosystem, which is why Vema was able to raise such a massive seed a few months ago. So that's the kind of model we try to replicate.
What happens if you do it the other way around? Like it's super hard right now. You build a company, you come in 2 years with a company ready, and then no one is there to invest anymore.
Yeah, I mean, that's the risk. So far, we've been quite lucky with that, so we're thankful. But yeah, it's always a risk, obviously.
Yeah, and I mean,
The same like if you're a VC, you invest in a company that doesn't raise in the next round. That's the same risk, except that we take the risk much earlier.
yeah. So you have a bit more. It takes a bit longer for you to come out into the market with a company than VCs do. Cool. Well, I guess we are at the end of this episode, but before that, we have the fire question. So I'll try to cover about 10 questions in the next 5 minutes. You'll have 1 sentence maximum to answer any of them. Are you ready for that?
Let's do it.
Cool. What's one underrated climate sector you wish more people would build in?
Adaptation.
Oh, interesting. What's the weirdest climate startup idea you've seriously considered?
Blasting rocks.
Interesting. Weird idea. What's one red flag you instantly spot in an early stage climate startup?
They spend more time talking about the moral imperative to solve climate than about what they're building.
Interesting. What's one lesson from fusion or direct air capture that applies broadly to climate?
It's that I think even in the most ambitious ideas, the same fundamental principles matter the most, which is, unit economics, rate of progress, methods.
I love that view. It's like you don't seem to care so much about the technology, but much more about the economics and whether or not it's going to take over the existing solution, which I really love. Obviously, you love Paris, but if you hadn't built marble in Paris, where would you have built marble?
That's such a difficult question. I mean, there's a lot of places in Europe where it would make sense. I think some people would say, yeah, in the US, you have a very high talent density too, even though it's a bit difficult to build in the US these days. I think I'd love to address the global south, like whether it's Africa or Asia. That's maybe something we might do in the future.
Will we see an office of marble in Africa in some days?
Who knows?
What's a climate tech misconception that you've completely tired of hearing?
A climate misconception.
You can't say climate is philanthropy. Everybody uses this one.
I think it would be that you need to assess a climate tech company in a different way. I think fundamentally it should be a great company. It should be a great tech, a great product, just that happens to reduce emissions or remove carbon or help adapt.
Love that. What's a piece of advice for a scientist looking to become a founder?
that you need to be ready to unlearn some of the things you learned, in particular of everything being perfect and moving fast and iterating. But at the same time, keeping what you've learned on the scientific method and applying the scientific method to discovery of problem and customers, etc.
What's the best innovation you've seen in climate tech so far? Hard to choose, I know.
How can I find one that's not one of the companies we've built? Yeah, I don't know, something that reduces methane emissions in cows without needing to monetize the carbon credits, or geologic hydrogen, or yes, space-based solar power is something I'm really excited about.
Super interesting. What's the biggest barrier to accelerating climate technologies?
I don't know if it's a barrier, but time, I think. Building great companies takes time. Building large-scale infrastructure takes time. And sometimes we are frustrated because it's not moving fast enough. But yeah, it just takes a bit of time. I think we overestimate the progress we make on the short term, and we underestimate how much progress we make in 10 or 20 years. So we'll get there. I'm confident.
I love that. I love the optimism for the end of the episode. I usually ask the three most important things to be a successful impact VC, but in your case, what are the three most important things to become either a successful impact studio or finding great ideas and building great companies?
I think, one which is for every founder is like persistence and resilience. Two, I think obsessing about people and just finding the smartest, most dedicated, kindest, most productive people you can find. And three, just always try to scale your ambition. Always try to think, okay, what could we do that could be an even more ambitious version of that company? And yeah, that would be three things.
I love that. Well, look, we are at the end of this episode. Thank you so much for today. I guess if someone is listening and they want to talk to you or to Marble, where can they find you online?
Yeah, so I'm on the usual platforms, LinkedIn. I don't really use my X account anymore, but generally the email is always like the the easiest, where I always reply. So it's ben@marble.studio.
Great, thank you so much. And I'll be cheering for Marble. I think you have an amazing model, and I think you're building great companies. So thank you so much for doing all of what you do. And listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe. Ben, one last word.
Well, thanks a lot, Hugo, for bringing me on the podcast. It was a lot of fun, and I'm looking forward to the next episode.
Sounds good. Thank you so much.